And lo and behold, we're actually in the money pretty nicely on this trade now, as it looks like it may break down. Now, listen, it's still early in the day, so we'll have to watch and see where things go. But a close below, then we need to see confirmation. If we see confirmation, first support, I mean, you'll have a little support around 3250 on gold, 3250, but then really you could be looking at 3140 and possibly even the $3,000 level. And yes, I still am amazingly bullish longer term on gold. I just think, again, it's due to wipe out the weak hands. A lot of weak hands have come in the market and bought in on gold near these highs. The market has a tendency to really wipe out those weak hands. They want to flush those weak hands out and then continue on its merry way to the upside.
Gold's breakthrough above $3,000 is no longer hypothetical. It's real and significant. With strong momentum and institutional backing, most forecasts anticipate it will remain above this level into late 2025. There has already been a pickup in purchases since November amid heightened U.S. policy uncertainty, and China, along with other central banks, may rapidly accumulate gold over the next 3 to 6 years to reach their desired gold reserve allocation targets. The market is simply shaking out because trade war fears, especially new tariffs and slowing global growth, are bolstering gold as a hedge asset. With over 2 decades of trading experience, Gareth Soloway, chief market strategist at verifiedinvesting.com, explains that the S&P 500 recently broke below a key trend line drawn from the April and June lows, but has not yet confirmed a complete breakdown. Contrary to their typical inverse relationship, gold and the S&P 500 have been rallying together, both nearing all-time highs. Institutional flows are reinforcing this dual rally. Central banks are on track to buy around 1,000 metric tons of gold this year, marking a 4th consecutive year of heavy accumulation, according to Reuters. Meanwhile, gold ETFs, despite holding still trailing post-2020 levels, have seen renewed inflows, reinforcing a new price floor above $3,000 per ounce. Historical technical analysis indicates that the S&P 2 gold ratio has broken below multi-year support levels, suggesting a potential long-term structural shift favoring gold. While equities may still make modest gains, gold is increasingly likely to outperform over the coming years. As investor sentiment remains cautiously bullish, central bank gold buying and ETF inflows continue to power gold's advance, while equity markets remain supported by strong earnings expectations. Both gold and the S&P 500 could continue rising in tandem if central banks remain dovish and macroeconomic risks persist. Technical signals indicate a potential rotation into gold, with stocks potentially underperforming as the gold to S&P ratio declines. Hawkish Fed shifts, a stronger dollar, or an equity-led market rotation could recouple the assets again. As we begin the video, remember to subscribe and press the bell icon to stay up to date. We value your feedback, so please leave a comment and give us a thumbs up if you liked the article.
If we flip over to the S&P chart and we take a look at the daily, this is a trend line that I've gone over with you guys pretty much every single day now for the last week. This is from our key low here, which was on April 7th, to the low here on June 23rd. And what we could see is that on July 15th, we broke below it. Now, we have not confirmed a breakdown just yet. So what does that mean? Well, again, as I've said many times over, this white trend line, when you don't confirm above or below it, in this case below it, it's only minor resistance. And again, we can even see how it is holding, but the markets are still able to slowly grind up with the extreme optimism. I think that's an important point here, is that right now we're dealing with, you have 2 different forces. Earnings are coming out where, frankly, most stocks are selling off on earnings. Yes, Google/Alphabet was up, but it was up a whole just 1% on earnings, while Texas Instruments fell over 10%. And we had many, many others like Tesla yesterday falling dramatically on the back of earnings. So in general, stocks have been priced to perfection to where even good earnings are causing selling. But the animal spirits that are keeping retail kind of pumping money in and using leverage are continuing to keep this market up. Now, if we look at the charts again, one of the things that this tells us is that the markets are vulnerable, but vulnerability does not dictate immediate downside. So yes, we're below this key line, and as long as we stay there, the markets kind of are basically hanging off the cliff. They're not falling yet, but they're hanging off the proverbial cliff. And so again, that kind of mindset is very important for me as a trader and as an investor to just understand where the markets are. Yes, we're essentially at all-time highs, but the market's again continuing to kind of be vulnerable to a bigger drop to the downside. All right, let's look at the US dollar here. The dollar is bouncing just a bit today. So again, the dollar is moving up. Yesterday, Trump did tour the essentially the Federal Reserve building, right? And we know he was kind of up in arms about the cost overruns of the renovations that are going on there. And essentially what he said is, listen, this isn't a fireable offense. And so it basically walks back those threats on the Fed Jerome Powell firing. And I think that, again, is creating a little bit of small optimism that the financial structure of the U.S. is still, for now, intact. Well, granted, we'll probably get more threats after next week's Fed meeting if Jerome Powell doesn't lower rates. But just again, today the dollar is inching up just a tiny bit here. And you can see it right here, inching up a little bit. All right. The 10-year yield remains in a tight wedge pattern. So this is the daily 10-year yield. And again, wedge patterns are important because they squeeze price. And when you squeeze something, think about a rubber ball. Eventually, if it breaks out, it shoots in one direction. And that's really what we're following here. So we still have some more kind of price action on an interim basis to see if we test this high end around 4.52 or this low around 4.3. But essentially, at some point, yields are either going to make a big move up or a big move down. And we can tell just by following the trend lines which way breaks and confirms. That should be the big move in that direction. Intel today, it is trading lower. You see it on my screen here on the daily chart, trading at $20.70. If we go to the intraday, you can see that initially Intel, when they reported earnings, popped to the upside, and then it's just been down, 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 down. And so again, this is another, I wouldn't call this a big earnings report. Intel used to be a major player in the semiconductors. They're kind of a second-tier player now because of all the troubles that they've gone through. But for the most part, we've seen a lot of these semiconductor stocks selling off on earnings, yet we've still seen NVIDIA hold up relatively well as the leader of the group. However, this is important, guys, and we'll come back to the Intel level, but this chart gets my attention. And you might say, wait, why? Well, because you have this wedge, this upsloping wedge that has broken, just like the S&P. It has not confirmed to the downside yet, so it's not a confirmed breakdown. But we're starting to make an inside bar pattern here, which again is a bearish pattern. And so when you have a big move down in a market or a stock, and I guess I wouldn't call this a big move down, but comparatively, it was the biggest drop that we've seen in the semis in quite some time. You then see these little bars that are inside, and this pattern in technical analysis is called a bear flag. Now, it is preliminary. We only have 2 candles of the bear flag at this point, which I'd call kind of an immature bear flag. But nonetheless, this would be, I would look at this as having more of a bearish tilt to it, even though, again, if we look at NVIDIA, NVIDIA is really hovering right at this little pivot top here, right at the upper ends of 2 major trend lines. Now, if we look at NVIDIA pre-market is down just a little bit, so we'll continue to monitor that. But again, at this point, we'll watch and see where things go. But I'm looking for an overall drop in the semis here. Again, more and more signals, more and more lead weights are coming on, whether it's Texas Instruments, whether it's other companies like Intel reporting. We've even seen a few other second-tier companies report, and most of them have traded to the downside on earnings, or even if they were good news, many of these stocks that were semis that reported, again, opened higher and then went to the downside. Good example of this, guys. Look at this. This was Texas Instruments. I showed this chart the day they reported or going into earnings. Earnings, we popped up here. So it actually did have an update on earnings. And then look at the subsequent days. Down, 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 and then bear flag back below this key trend line. So again, just something to monitor there. All right, on to Intel again. Let's flip back to Intel. I just want to give you my trading level for the day on Intel. The aggressive level is going to be basically at $20. There's a gap fill here. This, again, will be an aggressive day trade only level that I'll be monitoring to see if I want to take it in the live day trading room with members. For a swing level, I don't have much in the near term, but my next level here is 1936. So again, day trade and day trade. These would both be day tradable levels for me. Maybe I would consider down here at this low pivot at 1775 a potential bounce on Intel, just because, again, that would be a major double bottom. So I would say this is your one potential swing trade long level. These would be just day trade long levels today on an intraday basis. All right, flipping over to retail, Decker again reported earnings. Notice how the stock has been beaten down. So what does that do? It means that the bar for basically improving or impressing retail and institutional investors is low. Sure enough, the stock is up. But what's interesting is it popped massively, came back in, and it is settling up, but not up a lot. In all fairness, again, closing around 105 yesterday. It's about 117. So it's about 10% to the upside. But again, certainly off of the highs from initially yesterday. Now, as a day trade, I'm very hesitant to short something that's been beaten down because these are the ones that can short squeeze. The only level I see, there's a gap fill up around 126. I might mess around there and do a quick day trade short. But aside from that, I am not looking to counter trend trade Decker on the day.
Many forecasts anticipate Bitcoin reaching $120,000 to $150,000 by the end of 2025, with bullish stretches potentially reaching up toward $175,000 to $185,000 in optimistic scenarios. Given this context, if Bitcoin rises sharply, silver could see a correlated lift, particularly if inflation, supply constraints, or financial stress accelerate demand for tangible assets. Gareth explains that Bitcoin may be breaking a bear flag, not a bull flag, as many retail traders assumed. He emphasizes using key pivot points, such as topping tails, bearish reversal signals, to guide short-term trades. Bitcoin is showing weakness around $116,000, potentially acting as a leading indicator for the broader market. Countries outside the BRICS bloc are also looking to crypto as a way to bypass traditional finance. Russia, under heavy sanctions, passed a landmark law in mid-2024 legalizing the use of cryptocurrency for cross-border trade. Meanwhile, silver hit strong resistance from a trend line dating back to 2022, which it failed to break decisively. Despite the topping tails being invalidated in the short term, Gareth respects the long-term trend line and expects a pullback. In short, Bitcoin and silver are moving closer in terms of price behavior, driven by overlapping macro trends and shifts in investor sentiment. As Bitcoin becomes more institutional and integrated, its ties with silver strengthen, suggesting moves in one could correlate with moves in the other. Now, let's redirect our attention towards the interview.
And lo and behold, we're actually in the money pretty nicely on this trade now, as it looks like it may break down. Now, listen, it's still early in the day, so we'll have to watch and see where things go. But a close below, then we need to see confirmation. If we see confirmation, first support, I mean, you'll have a little support around 3250 on gold, 3250. But then really you could be looking at 3140 and possibly even the $3,000 level. And yes, I still am amazingly bullish longer term on gold. I just think, again, it's due to wipe out the weak hands. A lot of weak hands have come in the market and bought in on gold near these highs. The market has a tendency to really wipe out those weak hands. They want to flush those weak hands out and then continue on its merry way to the upside. Next up, let's look at silver. Remember, silver was into key resistance here. And we can see now what's interesting on this chart, and this is really important, another great educational point, is that you have this long-term trend line. You hit it here and you put in a topping tail. Then you came up here and closed above the topping tail, which negates the power of the topping tail. But would you flip bullish there? The answer is no. Why? Because you haven't taken out this long-term trend line. What's more powerful, a topping tail or a trend line that goes back to 2022? I would say a trend line that goes back to 2022. It's proven itself for now almost 3 years that it's capped price on silver. So I have to respect that, even if I like silver longer term. And sure enough, price is pulling back off of silver here. Nice little pullback on the chart today. Now, again, it could break in the next couple days for all we know, but at least for now, we keep our biases to ourselves and the charts rule the roost. Oil, let's take a look at U.S. oil today. Oil is retracing. Here's your bear flag. I talked about this for literally a couple weeks that's what was forming. We confirmed. We did, did we confirm? Let me see. No, technically we didn't confirm, but needless to say, this line still is minor resistance. And so far it is respecting that. If you look closely, we kind of went up to the underbelly just there and are stalling out. I still think this is a very bearish pattern, but again, you haven't confirmed to the downside. So we just have to monitor this trend line around 67. to see if it breaks back above and reestablishes the bear flag pattern or not.
The simultaneous rally in gold, Bitcoin, and the S&P 500 reflects a complex global environment in which inflation concerns, central bank policies, and geopolitical shifts are driving investors to both risk assets and traditional safe havens. Gold's breakout above $3,000 indicates a structural revaluation, fueled by central bank accumulation and institutional flows, while Bitcoin and silver exhibit increasing macroeconomic correlation. Gareth Soloway's technical insights advise prudence around key resistance levels, but long-term trends suggest sustained gains in tangible assets, particularly if macroeconomic uncertainty persists. Could central bank accumulation continue to drive gold higher even if the Fed becomes more hawkish later in 2025? Will Bitcoin's growing importance in global trade cause it to divorce from tech equities and align more closely with precious metals such as silver and gold? If this analysis has helped you understand the concerns, please consider liking the video, subscribing to the channel, and clicking the bell button to stay up to date on these critical debates. Thank you for watching.